Welcome back. I am John P. Today we are going to be talking about kind of the elephant in the room in the watch market. If this happens, if these things happen that I'm about to share with you, the watch market, notably the watches that have had the most upside over the last couple of years, will crash even further. Not quite to zero, but kind of metaphorically that way these watches will tumble and we'll see kind of a bit of a loop, if you will, in terms of pricing. It'll go down precipitously and we'll see a lot of these watches flooded onto the market. But before we do that, on the wrist today, Rolex 1016 Explorer, frogfoot dial, threw it on a canvas strap to make it look a little bit more casual as the Explorer is intended. So if you've been following watches, you've been on YouTube, you know that the whole watch market for the most part has pulled back. Some watches, notably the Patek Philippe Aquanaut, the Nautilus, the Rolex Daytona, some of the Submariners, including the new the Starbucks Submariner, the limited editions, the LVs, things like that, they've pulled back. On the higher side, some of them have cut in half in terms of the resale prices if we want to start talking about things like certain Aquanauts. And of course, the Nautilus has also seen quite a pullback. So we know this. But many people ask me all of the time, is this the end? Are the watch prices going to keep going down? Is it all brands? This is something we should look at, right? I mean, this is literally the majority of what I do at Del Rey Watch, where we buy, sell, trade watches. Predominantly, I oversee the business, the scaling, kind of the more analytical side of things. And Federico, as you know, Federico talks watches. He's overseeing more of the sales-driven things, the things that he has experience with, including his channel, as well as other kind of marketing type aspects. And so I look at competitors, I look at the marketplaces, eBay, Chrono24, and others that are popping up every day. And there are some startling facts that people are really not talking about. And I'm asked about this, once again, almost every day. So something that you can do, and I'll walk you through this if you want to go, but look at the big players out there and look and see how many of these Rolex watches, Audemars Piguet watches, Patek Philippe watches, these ultra hot watches and the models, see how many of these are in stock, right? Look at the makeup of the inventory. You can view all watch dealers' inventory, sort by brand online, and generally also get a feel for how much of the inventory, the cost of the inventory, see what's out there. Even do it with DelReyWatch.com, see kind of where we're kind of shifting our focus of inventory, see what we're focusing on and what seems to be working for us, but also you can see how long the inventory has been there. And if what I'm about to say happens, the watch prices on those hot models will absolutely drop. So this is what will happen, right? You see it right now in tech, you see it in real estate, you see it in other industries, but companies are saying, hey, we overpaid for something or our expenses are too high. We have investors, we have debt obligations we have to meet. Transpose that on the watch industry. Imagine large players, they bought inventory at slim margins, right? These ultra desirable watches had slim margins for the last handful of years because it was very predictable. So a company could say, hey, I know this Rolex Submariner is definitely going to sell for this price or more tomorrow. Probably, so I have no problem buying that piece of inventory on debt because I have kind of the formula for how much I'm going to get out of it, and it's more of a machine, right? A machine was built, put this much money in, mix it with some marketing, here's our costs and expenses, get this much out, and because the margin was so slim, it didn't really matter because it was predictable, so it was scalable, right? It was more of a tech kind of thing, more of a business kind of thing, as opposed to that more historical watch dealer mentality of, hey, let's stock what people, maybe might find interesting, a little bit steeper margins because it might sit on the shelves. That was not the formula that played out with a lot of big players over the last handful of years. And so what we see now is many players, large and small, holding a lot of inventory on these notable models and brands that has been overpaid for. A lot of these players essentially are going to have to meet either debt obligations, investor obligations, and right now what we see, not only in the watch industry but other industries, is the cutting back of expenses, the cutting back of labor forces, and that is going to give some runtime. So what we've been seeing now is some people out there, I mean, including businesses, right, corporations, are waiting to see what happens, waiting to see if conditions improve before dumping inventory, which will set off this chain reaction. Now, what is this chain reaction? Well, imagine that you have a Rolex Submariner or a Daytona. You want to get out of it. You didn't like it that much. Maybe you speculated. You read the Wall Street Journal or one of these other alternative asset kind of pitching articles that have been pumped out there in the world the last handful of years. Now, imagine you have that Daytona. You're not a diehard enthusiast. It's nice, but you don't need to have it. You don't want it. You'd rather get out. You start trying to sell it, and people are saying, well, we'll pass on that because they already have 20 of them in stock that they haven't been able to sell. So unless they're taking that Daytona at a tiny fraction of really what that person is expecting to get from it, it's not going to be stocked because the pricing is no longer predictable. And so that's where we are, right? But imagine you're still that collector and you want to sell it. Well, where are you going to go? You're going to go to eBay. You're going to go to Chrono24. Maybe you'll come to Delray Watch. Depending on the watch, we pumped on the brakes in terms of these historically over the last handful of years, ultra desirable watches. We've doubled down on our original focus of enthusiast kind of off the beaten path watch brands, right? The GPs, the UNs of the world. And so what you see is now you have collectors competing against dealers on these platforms. Platforms, by the way, that have made it not only easier to sell than ever before, but also have started providing guarantees, in some cases better than the guarantees of kind of the ultra premium or big box shop dealers out there on the internet, right? These very long guarantees and these return policies and things that were always kind of a scratch of the head trying to figure out, what are they doing there, right? So you have these platforms that are guaranteeing these types of terms, the authenticity, it's being checked beforehand, right? You send a watch or you buy or sell a watch on eBay, goes through a third party, they provide that authentication, they handle the return process. So in some cases, buying a watch on these platforms, although might be or certainly will be more expensive than going directly to the dealer, if you don't know the dealer, they provide that extra service that a reputable dealer would provide. So a collector can sell a watch to another collector with the same, if not better, level of service than someone might get from a highly reputable dealer. And when that happens, in this scenario we have here, you have truest competition that will create this price drop scenario of the dealers needing to meet debt obligations and free up cash either to buy new inventory or just stay afloat, and the collector just wants to get their money out and move on to something else, or for any number of reasons, right? So you have this price competition from someone that has no overhead, has the lowest cost that they possibly could have purchased the inventory at, so their willingness to sell price is way lower than a dealer likely, and you just have this infinite kind of price competition that should just follow out to the bottom to find some type of price floor of where that ends. And depending on the situation, I think, now I can't predict everything, right? Because I'm not in charge of monetary policy, and obviously I'm not in charge of the economics of really anything out there in the world, right? I buy, sell, trade watches. So there's other factors at play. But in theory, that could keep going until truly we have a dumping situation where the price competition doesn't work for certain players. Maybe they fold, or maybe they have to just liquidate at a loss so that they can rebuy in prices lower and take a loss on the books. And that's when you'll see the market being even more flooded with low-cost inventory at these very attractive watches that collectors have been gravitating towards for the last handful of years. Now, parts of this could seem a little bit extreme, but that's kind of what I see playing out. Is not many dealers want to take in more of these watches currently because it's really a crapshoot where the pricing will go short term, even long term for that matter. And you have a lot of people that are trying to figure out what to do with that inventory they now overpaid for. And they're saying, well, it's either going to go up and we'll be okay, or it's going to go down and we'll have to shed and take a loss. And then when that happens, we'll kind of see the true realization of where the pricing should be on these watches out there in the market. Now, what does that mean for us as collectors or dealers or anything like that? Well, it's up to you to really decide. I personally am keeping track of it because that's what we do at Delray Watch, right? We buy, sell, trade watches, and so the watches we stock in inventory, I'm going to make sure that they're going to be watches that we can protect ourselves with in terms of limiting the exposure to risk, and also make it so that our business is a going concern in the future, and also they are watches that true watch collectors actually want to wear and enjoy and love, because that was the original intent of our business, not just to create this infinitely scalable stock market of watches, if you will. By the way, StockX no longer does trade pre-owned watches. Interestingly enough, they got out of that market really quickly and shifted towards, unworn certain watches that must be totally unworn with box and papers, which, as you know, is so incredibly difficult to do, when we're talking about these ultra desirables. So that's where things are going. But as a collector, I always recommend to buy what you love and wear and enjoy it, and not necessarily engage in this kind of speculation thing, because this is kind of a new thing for watches, and to kind of, invest in that kind of level when there's so many more predictable ways to get returns probably is not the best idea. So if you're a watch collector, you're an enthusiast, you love and enjoy them, that's where I think watches should be. But what do you think about this? I would love to see it and hear it in the comments below. Guys, please do not forget to thumbs up, like, and subscribe. I really do appreciate it. You can find me on Instagram, TheRealJohnP, and we'll see you next time. You've been chatting with John P.